Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Today we have a topic with us is called financial reporting. Now, what exactly financial reporting is all about? See, financial reporting is something that every company does, and they have to do. There is no option. For listed companies, it is very much by default they need to do it, because that reporting goes to all the stakeholders around the globe. Let it be investors, clients, customers, or probably your creditors, bank loans. So it can be anything and everything. Financial reporting is going to play a massive role, because they will see this, they will analyze, and then based on that, they will take a concise decision that whether this is an appropriate thing, whether to go for this company or not. So we will try and learn this. What is the financial reporting part? Now, see, financial reporting is the communication. It is the communication of important financial information and other activities of the organization to various stakeholders for helping them to get idea about the actual financial position of the organization at any point of time. So this is an important for private companies as it is for listed public companies. Now, various stakeholders interested in the financial reports of any organizations are investors, creditors. They are investors, creditors, bankers, reg agencies, okay, and finally the government. Okay, so in today's economy of the world, we have a well-developed banking ecosystem of investor, venture capital, that is VC funds, and let's call them entities with the financial resources. Okay, so on the other hand, there are very well-developed financial reporting for business houses and also emerging what we call as businesses. So financial reporting business may be in need of the what we call as finance and investment too, okay, at some point of time in their life cycle or other, but let's call them entities in the need of the financial resources. So the thread which brings their stakeholders on common platform is the financial reports. Okay, now we will try and incorporate the objectives over here of financial reporting in accounting. See, to highlight the achievement of the company on a periodic basis. So the achievement can be financial in nature, like increase in sales, profits, market share, as well as achievements can also be in the form of awards, recognition, and the breakthrough that is in R&D, research and development. So to provide the financial information about the company to investors, creditors, bankers, public, reg agencies, and government, they all are included. Now it is also used for to market themselves. It is also used for marketing themselves by companies, which depends on external funding. They do absolutely external funding part. Investors, they depend heavily on the reporting for making their yes or no decisions. So thus it helps in what we call as capital raising. Okay, so fourth, they also help in to convey the strategic roadmap. Okay, for the future of the company. So during the trying times or loss-making phases, it is used to allay the investors, okay, the concerns and strategic plan for turning around the company. So it helps the customers in informed about the status of the company and thereby building confidence level. Internal financial reporting in accounting, on the periodic basis is used by some companies to keep their employees well informed. So it's called internal financial reporting. Okay. Now, to comply with the statutory requirement, organizations are required to file reports. They are required to file reports to various agencies like ROC, governments, stock exchange on quarterly basis, on quarterly basis and on annual basis. So to provide information about how the company is utilizing various resources is available is at its disposal. Now we will try and incorporate what constitutes the financial reporting in accounting part. Fine. See, as the name goes, the financial reporting typically constitutes the overview of the financial performance. Okay, so financial reports, maybe it can be quarterly, it can be annual, or it can be, preliminary. So there are some key highlights. First is the financial statements. Now, this includes balance sheet. We have profit and loss accounts, CFS cash flow statements. Some companies may have both the standalone and consolidated financial statement. If it is having two or more different units, then these statements are purely what we call as quantitative in reflection of the performance of the organization. Second is the director's report. Now, what goes in here? See, it provides an explanation of the financial statement. It provides info about the operational performances and major highlights and achievements during the bad performances. And during the bad performance period, it provides reason for the underperformance also. Now, the third part that we are going to discuss is the management discussion and reporting. So this is called the MDA report. Okay, so when we talk about the MDA report, it provides information on the current position of the company. Okay, it provides the current position of the company vis-a-vis the industry peers. One gets to know about the industry trends. Okay, so it also contains information about the future strategies and opportunities. Fourth is the capital structure. So over here, information on the stakeholders about the capital structure of the organization and changes therein if any. Fifth is the notes to accounts. So over here they incorporate the methods and the accounting policies the company is using to record the transactions. The sixth is the auditor's report. Now, if we talk about auditor's report, they provide independent opinion. This is very important word. They provide opinion. They are not gouging their the future potential or the future estimates. They will never do that. The only thing that they do is they give the opinion on the financial statements and how far they are accurate. They show the true and fair value of the financial statements, and as well as the accounting policies too. They should also show for the details for accounting policies that are used by the company. Now the seventh is the corporate governance report. Okay, so over here it provides info on the composition. It provides a report on the composition of the BOD, board of director, and the profile. It also talks about the remuneration that is paid to the top management and the compliance part too. Okay, and other stat requirement, that is statutory requirement. The next that comes in our way is prospectus. Well, for a company going for IPO, the prospectus, it contains all the information. It contains all the information about the financial operations, management, okay, and also the product mix. So that includes financial reporting, okay, for business goals of organization. Okay, the next that goes is the earning calls. See, earning calls are generally teleconferences, and where the financial performances of the company during the year, a particular period, is discussed with the investors and the financial reporting analysts. So on the concluding note, I can say that in short, we can say that it creates an ecosystem for information, which can be used by various stakeholders for multiple objective financial reporting accounting. And a good practice can improve the efficiency of the market, as information is easily available to all the stakeholders. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.